Hello dear students, hope you all understood the activity based costing. So our next topic is transfer pricing. Here I am explain the introduction or meaning of transfer pricing, objectives of transfer pricing and different methods in transfer pricing. Okay students, let's see the introduction part of transfer pricing. First, what do we mean by transfer pricing? We know that every organization have different divisions or department such as purchase department, sales department, store department, maintenance department, finance department, etc. Suppose the organization wants to transfer one department's product or service to the another department or division. What would be the price of the product or service while making such inter transfer of product one division to another division within the same company? In such a situation, the price is used in business organization is called transfer pricing. Here, the department which supply goods or service that we can call the selling department or selling division has to fix the price for such internal transfer. This price we can call transfer price. Okay, students, did you got the point? That is, transfer price is the price one department or division or segment fixed for a product or service supplied to another department or division or segment of the same organization. It is the internal division charge at which one department or division sells goods and service to the another department or division in the same organization. The department or division or segment supply the product and service we can call supply division. Okay. And the department or division or segment receive the goods and service known as receiving division. One of the important point is that the transfer price do not differ to the market price of the product or service. Suppose the transfer price and market price of a particular product is differ. It may cause negatively to any one of the division in the organization, or they try to start buying from the market to get a better price. So the transfer price should near the market price. Okay, students, these are the meaning of transfer pricing. Let's the definition of transfer pricing. Transfer pricing is the setting of price for goods and service sold between related legal entities with an enterprise. Okay, the next part is objectives of transfer pricing. What are they? The first one is to provide information for decision making. It provide information to make correct decision in the organization. The second one is to optimize allocation of financial resource. It means the transfer pricing is to assure optimal allocation of resource to various divisions so as to achieve the objectives of the organization as a whole. To measure divisional performance, it helps to measure the different divisions in the organization. The next one is to motivate divisional managers. For what? They try to transfer from one department to another department. That motivate the divisional managers for the transfer pricing to make such inter transfer. To retain divisional autonomy, the division can retain the autonomy in the organization. To ensure minimum intervention by top management. Here, ensure that the transfer pricing ensure that minimum intervention by the top management for the transfer of internal transfer of the product or services from one department to another department. To retain the intervention by the top management. To make decisions such as make or buy. It's another very important objective is that it helps to make or buy decision. Okay, to sell a product as it is or process it further. It can two type be transferred. That is, finished goods can transfer to another department. Also, semi-finished goods can to transfer to from one department to another department. So these are the objectives of transfer pricing. Once again, to provide information for decision making, to optimize allocation for financial resource, to measure divisional performance, to motivate divisional managers, to retain division autonomy, to ensure minimum intervention by the top management to make decisions such as make or buy, to sell a product as it is or process it further. Okay, the next part is methods of transfer pricing. There are different methods included in transfer pricing, that are total cost or full cost method, total cost plus profit margin method, margin cost method, standard cost method, opportunity cost method, market price method, negotiated price method, arm's length price method, dual price method. Okay, the first one is total cost or full cost method. What is total cost of full cost method in the transfer pricing? Okay, student, the transfer price is based on the total cost of the product per unit, and it includes all direct cost and overheads. One of the important point is to be noted that the selling division cannot realize any profit of the goods transferred. It includes total product cost per unit. That means all direct cost and overheads. And the selling division cannot realize any profit on the goods transferred. This is called total cost or full cost method. The second one, that is total cost plus margin method. Under this method, the transfer price is fixed by adding a profit to the total cost per unit. That means add some percentage of profit to the total cost. Okay. Then third one is marginal cost method. Okay. It involves the transferring of goods and service at the marginal cost per unit by the selling division. One of the important point is that fixed costs are excluded from the total cost. Once again, the fixed costs are excluded from the total cost. Okay, it involves the transferring of goods and service at the marginal cost per unit by the selling division. The next one is market price method. In this method, using current market price of goods and service for the internal transfer. Here, transfer price is made at market price. Okay. The next one is what is standard cost method. Under this method, the transfer price is based on standard cost. This method is very simple once the standards are properly set. Okay. The next one, opportunity cost. Under this method, goods and service are transferred by selling division at opportunity cost. Okay. There are two situations. That is, the opportunity cost is the maximum price that the buying division would be willing to pay. The second situation is, it is the minimum price that the selling division would be willing to accept. Okay, there are two division. We know that buying division and selling division. In case of buying division, maximum willing to pay. In case of selling division, minimum willing to accept. Those are the two situations in the opportunity cost. Maximum willing to pay, buying decision. Minimum willing to accept, selling decision. That is the transfer price in the opportunity cost method. Okay, the next one is negotiated price method. Under this method, the buying department and selling department are negotiate between them and the mutually agreed price is arrived at. It is a mutually agreed price. Here the division managers are agreed to a transfer price by negotiation when there is no acceptable market price. Okay, the another name of negotiated price means acceptable price. Okay, students, the next method is arm's length price method. What is it? Under this method, the price would be charged for the same product or service if independent transactions were carried out with unrelated parties. There is a very important point, that is unrelated parties are make independent transaction of goods and service in the same department. Here there is no external buyers and it is sold at different price in different market. It's a problem in arm's length method of transfer pricing. There is no external buyers. Okay, the last method of transfer price is dual price. Under this method, two transfer price are used. Under this method, two transfer price are used. Here, the selling division can charge the price for goods and service under market price method or cost plus profit margin method. Here, most appropriate method is market price method. Okay, students, these are the important methods included in the transfer pricing. Okay, I think hope you all are understood the meaning and introduction of transfer pricing, objectives of transfer pricing, and the different methods included in the transfer pricing. Okay, this is all about the theory part of transfer pricing. Thank you. Thank you very much.